Our operating margins were in line with our expectations. It came in at 17.1%, which is a 13 basis points increase on a year-on-year basis. Our services business grew 5.8% year-on-year in constant currency and declined 1.9% sequentially. Our engineering and R&D services business grew 8.4% year-on-year, but declined 3.5% sequentially in constant currency. These declines were mainly due to ramp downs in manufacturing and the medtech vertical. Our software business had a good 3.5% year-on-year growth in constant currency. On the people metrics, our headcount at the end of the quarter was 219,401, a reduction of 3.6% from a quarter-on-quarter perspective. But a very large part of this reduction is attributed to the State Street joint venture exit that we had announced earlier in the quarter. On an LTM basis, that is last 12-month basis, our IT services voluntary attrition stands at 12.8%, amongst the lowest in the industry. Coming to the geographies and the verticals, geographies on a year-on-year basis, Americas grew 8%, Europe grew 3%, and the rest of the world business declined at 3.6% in constant currency. In our verticals, on a year-on-year basis, telecom and media and retail and CPG fared well, growing at 69.2% and 9.7% respectively. Manufacturing grew 3.5% year-on-year in constant currency, and it declined on a sequential basis. Life sciences and healthcare declined 4.1% year-on-year in constant currency, primarily because of completion of projects that happened last year, and also some softness that we saw in the medtech industry segment. Within GenAI space, we continue to witness a lot of traction on AI and GenAI related opportunities. After launching HCLTech AI Force, a generative AI and automation platform a couple of months ago, we've launched another offering called HCLTech Enterprise AI Foundry to simplify and scale enterprise AI journeys. We have multiple ongoing engagements where we are working with clients to deliver real value, for a global technology major who selected us to implement a GenAI-based solution for gaming review analysis, including the automation of data collection, sentiment analysis, and the operational automation, resulting in significant workload reduction. They also selected us to deploy GenAI to transform their content lifecycle management and the processes. During the last quarter, HCLTech has been ranked in the Business World's India's Most Respected Companies 2024 list at number 7. We're very happy to note that, and we're happy to announce that today. And we were also named as the most honored company in India in the annual Asia Executive Team Survey by the Institutional Investor Research. HCLTech ranked number 1 in 21 categories in the technology, IT services, and software sector, and had a total of 27 top 3 rankings across Asia ex-Japan and rest of Asia ex-mainland China survey tracks. I would like to thank all the investment analysts and investors for their acknowledgement of our good work. Now, looking ahead with Q1 performance in line with our expectations, we expect to grow in Q2 with all verticals and geographies seeing a sequential growth except financial services. As you know, we shall have the planned impact of State Street divestiture on our revenue in Q2, and including that impact, we remain comfortable with our full year revenue and margin guidance as clients spend on GenAI and other emerging technologies are seeing some traction. We expect to meet the guidance through strong operational execution that we've demonstrated over the last several years. With that, I will hand over to Pratik to provide more details on our financials.
Thank you, CVK. So CVK has given you the constant currency growth. So I'll just touch upon the rupee growths on a year-on-year basis as well. And in there, the HCLTech revenue came in at 28,057 crores, which was 6.7% year-on-year growth. And within that, services stood at 25,360 crores, which is up 6.9% year-on-year in rupee terms. ITBS grew at 6.4% year-on-year in rupee terms, and ERS was up 9.5%. HCL Software was up 4.3%, again in rupee terms. EBITDA margin came in at 5,793 crores at 20.6% of the revenue, which was a growth of 7.5% year-on-year, again in rupee terms. And EBIT margin came in at 17.1%, 4,795 crores, which is an increase of 13 basis points year-on-year, and increase of 7.5% year-on-year as well, just like the EBITDA. Net income came in at 4,257 crores, which is at 15.2% of the revenue, which is up by 173 basis points, 1.73% year-on-year, and increase of 20.4% on a year-on-year basis in rupee terms. Our focus on profitability and managing capital efficiency continues to deliver notable improvement in return on invested capital. That's the extra page that we put in every quarter, which I hope you do look at it as investors and analysts and media. And that continues to grow. The last 12-month ROIC stands now at 34.6% at a company level, which is an increase of 3.5 percentage points on a year-on-year basis. And on a services basis, that is now at 42.8%, which is an increase of 4.8% year-on-year. And software continues to be at 16.1%, so it's flat on the last couple of quarters. We continue to demonstrate healthy cash conversion. Free cash flow came in at 21,637 crores, which is an increase of 14% year-on-year for the last 12-month period. This also represents a conversion ratio of 133% of the net income. So let's say if you have profit after tax of 100 rupees or $100 million or whatever, the cash conversion is actually 33% more than that. And our balance sheet continues to remain very strong. Gross cash of 27,000 plus crores and net cash of close to 25,000 crores. We brought down the DSO by another day this quarter, including unbilled of 82 days, and decrease of improvement of 6 days on a year-on-year basis. For the shareholders, therefore, the last 12-month diluted EPS comes in at 60.52. That's the EPS, and that's an increase of 8.7% year-on-year. And the board has declared a dividend of rupees 12 for the quarter, the record date of which is 23rd July. And the payment of the same shall be on 1st of August 2024. With that 12 rupees, the last 12 months payout comes out to be 54 rupees per share, which is a payout ratio of about 89% of the net income. A little higher than the typical payout rate that we've had in the last 2-3 years. With that, I'll hand over to Ram, our CHRO.
Thank you, Pratik. Good evening, everybody. I think CVK has already given the headline message about where we are with our headcount and our attrition. Headcount this quarter, we need to look at the headcount, taking into account the effect of divestiture that happened, State Street. Outside of that, if you see, it's quarter on quarter effectively flat. That's in line with what we had planned for, given the investments we had made in the previous quarters in preparation for the offshore transitions planned for a couple of large engagements. So headcount is in line with what we had planned for. During the quarter, we added about 1,078, 1,100 odd freshers. That again is in line with plan for Q1. Attrition at 12.78 LTM, IT services continues to be at the lower thresholds that we have had in many quarters now. So that continues to be a positive story. We expect it to sort of stabilize around similar levels so far as attrition is concerned. So those are positive stories. I think the biggest thing is around the traction that we are seeing in GenAI. Last quarter, we sort of reported the investments we are making in upskilling our people for GenAI skills. If you recall, last year we trained and certified about 42,000 employees. Our plan this year is to be able to continue that momentum, which typically means that every quarter we need to add incrementally about 20,000 people trained and certified, so that at the end of the year we'll cross the 100,000 mark. So we're on course to do that. Q1 we have worked through the plan. We have achieved what we had planned for. So our focus on upskilling continues, both in terms of what we do for GenAI as well as broader data and analytics skills as well. So our focus continues on that. So that's in terms of readiness for growth in Q2 and beyond. So that's a brief. I'll just pause here. I will open the floor for questions.
If you like this video, then like, share and subscribe to ET Now.